Welcome all, this is Abhilash. So in this session, I am going to talk on the banking regulation. With the banking regulation, we are going to talk on the Regulation Act. The banking. The banking means the accepting for the purpose of for lending or investment of a deposit of money from the public, repayable on demand or otherwise, and withdraw by check, draft, order, or otherwise. Banking company means any company which transacts the business of banking in India. So banking company means nothing but the banks. We have ICICI Bank, HDFC Bank, Axis Bank, SBI, IDBI. These are the all banking company. That means any company which transacts the business of banking in India. Explanation: any company which is engaged in the manufacture of goods or which carries or any trade and accepts deposits of money from the public merely for the purpose of financing its business shall not be deemed to transact the business by banking with the meaning of this clause. Act to have a overriding effect. So Section 5A of the Banking Regulation Act 1949 provides that the provision of this act shall have effect not notwithstanding anything to the contrary contained in memorandum of article of a banking company, MOA of a banking company, an agreement executed by it, any resolution passed by the banking company in general meeting or by its board of director, whether the same be registered, executed and passed as the case may be. It is further provided that any provision contained in the memorandum, article, agreement or resolution affords shall, to the extent to which it is repugnant to the provision of act, become or be void. Restriction on use of word bank. It is a section as per the section 7 of the act provides that individual, firm or group of individuals and any company other than banking companies shall not use the part of its name in connection with its business any words like bank, banker, banking. Same issue I have faced when I was trying to register my company as an investment firm. So, government Ministry of Affairs is having, they have sent me the mail that I can keep the investment or money name with my company name, right? For the getting name, I had to get the special regulation from the government, right? So there is some charges I have to pay, and then I will get the name. So with the as per the section 7 also, any individual firm can't use the bank, banker, and banking name. Right? No company shall carry on the business of banking in India unless its uses as part of its name at least one of such words. Expectation: a subsidiary of banking company formed for one and more of the purposes mentioned in the section 19, whose names indicates that it is subsidiary of the banking company. Any association of banks formed for the protection of their mutual interest and registered under the Section 8 of the Companies Act 2013. Not to engage in trading activities as per the Section 8 provides that any banking company shall not directly and or indirectly deal in the buying and selling or bartering of goods except in connection with the realization of security given or held by it. Engage in any trade or buy or sell or barter goods or others or otherwise that in connection with the bills of exchange received for collection or negotiation with such of its business are referred to in section 6. By this prohibition does not apply where the banking company is authorized by CG central government by issue of notification under section 6. Goods means every kind of movable property other than actionable claims, stock, shares, money, bullion, as or spices are all instruments referred to in section 6. Holding an immovable property. As per the section 9 provides that a banking company can hold any immovable property only as follows. It requires for its own use. Otherwise, up to period of 7 years to 5 years with the RBI approval, such extension may be granted where RBI is satisfied that such extension would be in the interest of the depositors for the banking company. So this section says that the banking company can hold the immovable property for their own use. If they want to start, if they want to continue their banking operation at one place, so they can hold immovable property for 7 to 5 years. If they want to extend their hold for the on the property, so they should get the RBI approval. Payment of brokerage or commission as per the section 13 provides that the banking company can pay out directly or indirectly by way of commission, brokerage, discount, remuneration in any form of in respect of any shares issued by it, any amount not exceeding in the aggregate to on help of person to be paid off values of the said shares. So section 13 provides the banking company can pay out commissions to their outside employee who are working for their insurance product, share market product. So they are paying the commissions brokerage from their by section 13. Charges on floating assets. As per the section 14, a charge shall not be created upon any unpaid capital of the company and any such charge shall be invalid. Section 14A, a floating charge shall not be created on the undertaking or any property of the company or any part thereof unless the creation of such floating charges is certifying in return by RBI as not being detrimental to the interest of the depositors of such money. Section 48 any such floating charge without obtaining the certificate of shall be invalid. Any banking company aggrieved by the refusal of certificate may within 90 days from the date of in which such refusal is communicated to it appeal to central government. Payment of dividend. As per the section 15 provides that any banking company shall not pay dividend on its shares until all its capitalized expenses including the following have been completely written off. Preliminary expenses, organization expenses, share selling commissions, brokerage amount of losses incurred, and any other item of expenditure not represented by tangible assets. So payment of dividends as per the section 15, the banking company shall not pay dividends on its shares until they capitalize expenses like preliminary expenses, organization expenses, selling commissions, brokerage, amount of loss, everything once calculated. After that, only banking company can pay the dividend to its customer. As per the section 15 provides that the banking company may pay dividends without writing off depreciation if any in the value of investment in approved securities in any case where such depreciation was not actually been capitalized or otherwise accounted for as a loss. Depreciation, if any, in the value of its investment in shares, debentures or bonds, in any case where adequate provisions for such depreciation has been made to the satisfaction of the auditor of the banking company. Bad debts, if any, in any case where adequate provisions for such debts has been made to the satisfaction of the auditor of the banking company. Appointment and voting rights of director. So as per the section 16 Banking Regulation Act provides that a banking company incorporated in India shall not have any person as a director on its board of directors if such person is already a director in any other company. Okay, so this point means the only person can become a director of the company with the same position. He can't have same role in other institutions. So the above condition does not apply in relation to a director who is appointed by the RBI. As per the section 16(1)(a), provides that any banking company incorporated in India shall not have its board of director more than three directors, which among themselves are entitled to exercise voting rights in excess of 20% of the total voting rights of the all the shareholders of the banking company. Creation of reserve. As per the section 17 provides that every banking company incorporated in India shall transfer before a declaration of dividend at least 20% of the profit as per the profit and loss account to reserve bank. However, central government may, or on recommendation of RBI, having regard to the adequacy of paid up the capital and reserves of the banking company regulation relations to its deposit liabilities, declare by or in order in writing that the provisions of subsection shall not apply to the banking company for such period as may be specified in order. Such an order can be passed only when the amount in the reserve fund together with the share premium account is not less than the paid up capital of the banking company. Creation of reserve continue as per the section 72 provides that the where a banking company appropriates in any amount from the reserve fund or share premium account, it shall within 21 days from the date of such appreciation report the fact to RBI, explaining the circumstances related to such appreciations, and the RBI may extend the period of 21 days by such period as it thinks fit or condone any delay in the making of such report. Maintenance of a cash free as per the section 18 provides that every banking company not being a scheduled bank shall maintain in India by way of cash reserve with itself by the way of balance in the current account, the way of the net balance in the current accounts, some equivalent at least 4% of total amount of its demand and time liabilities in India as per the for last Friday. As on the last Friday on the second preceding fortnight, and shall submit Reserve Bank of India before 20th of that every month are returning as a return showing the amounts of hold on and alternative Fridays during a month. So RBI has provided the regulations under the RBI Act. So company has to be submit their returns with the amount held on in the bank on the every 20th day of the bank. So this again continue maintenance of cash reserve. So in detail, I will share this PDF in a group so you can read all the points. So I don't need to repeat again and again. It's fortnight maintenance of cash free business activities of subsidiaries as per the section 19 provides that a banking company may form a subsidiary for carrying on any the all of the following activities only. The undertaking of any business which under clause A to 0 section 6 is permissible for a banking company to undertake. With the previous permission in writing of RBI, the carrying on the business of banking exclusively outside India. The undertaking of such other businesses which RBI may, with the prior approval of central government, consider to the conducive to the spread and banking in India and to otherwise useful or necessary in public interest. So, as per the section 19, the banking company can form their subsidiary company under the main company for carrying their business of banking business operation. The banking company cannot be considered to be engaged in the business activity which is carried by on its subsidiary. Restriction on holding shares of another company. A banking company shall not hold shares in any company, whether as pledge, mortgage, or absolute owner of an amount exceeding 30% the paid up capital shares capital of the company or its own paid up share capital under the reserve, which is less. This condition does not apply in the respect of shares of the subsidiary held by the banking company. Regulation of loans and advances by RBI as per the section 20 by banking company shall not grant any loans or advances on the security for its own shares, enter into any commitment of for granting any loan or advances for to on behalf of its directors, any firm in which any of its directors is interested as a partner, manager, employee, guarantee. Any company not being its subsidiary or company registered under the Section 8 of the Companies Act 2013 or a government company of which for the subsidiary are holding which and directors of the banking company's director, managing agent, manager, employee, and guarantor in which he holds subsidiary interests. So, as per the section 20, any banking shall not grant any loans or advances from the security of its own shares. Any individuals in respect of whom any of its directors is a partner and guarantor. No permission without prior approval of RBI. As per the section 20A1, expect with the prior approval of RBI, a banking company shall not remit in a whole or in a part any debt due to its by any of its director, any firm or company in which any of its director is interested as a director, partner, managing agent, or guarantor, any individual, if any of its director in his partner guarantor. Section 20A, any remission of debit is contribution of the aforesaid shall be void and of not effect. So as per the section 20A, no permission without prior approval of RBI. Expect with the prior approval of RBI, the banking company shall not remit in the whole debt due any part debt due. So here we are done with the Banking Regulation Act. Thank you. Best wishes.